Embedded finance is a fundamental change on the way of doing banking. Open banking could be said that is the Kickstarter of sharing information outside your bank.
What's the biggest lie people believe about open banking or open finance right now? Everybody, and welcome to the Curiosity Code podcast. I'm your host, Alex, and today I'm joined by Jose Luis Navarro, one of Europe's leading voices on open banking and open finance infrastructure. And we're diving into whether open banking's evolution is actually democratizing finance or just creating new gatekeepers with better PR. Jose, welcome to the show.
Thank you very much, Alex. I'm really glad to be here with all of you, and I'm ready to have a friendly exchange on our views in embedded finance and open banking.
Yeah, absolutely. I think we've spoken on this podcast before about open banking, and I hope to get fresh perspective because it's evolving technology, it's evolving approach to doing business and banking. So let's begin with, how do we translate open banking and open finance into simple everyday language? If we remove all the industry noise, what is open banking in practice when comparing the bank's perspective with the customers?
I understand that people is not really familiar with open banking. So open banking concept is really crystal clear. Is the bank has to open its information. Okay, it comes from the regulation. There was a payments regulation, the PSD2, and coming soon the PSD3, where the banks are obliged to share under the consent of the final customer the information, transactional information or payments information of that customer, and we are obliged to share it with third parties. What does it mean? Is like you are, for example, a user of a portfolio app in your mobile phone. If you give consent to that portfolio app, and I, like a bank, receive the consent from that app saying this customer wants you to share his information with me, I have to do it. Okay, so it looks simple. I think it's good for the end customer, but it means a change of mindset for the banks. Because we are not serving our customer directly, but we are being requested to give information for another company, another fintech, another partner to serve that customer. So it has more changes than initially you could envision with open banking, right?
To summarize, from customers' perspective, it just opens up lots of data points for them. So you can enrich the user experience, leveraging different data sets. And on the bank side, it's just another level of challenge how to operate within this environment when you have.
Yes. I mean, I think you sum it up really well. For banks, it was a new regulation, a new application, but it changed fundamentally how you serve the customer, and it opened new way of doing it. So it's open banking could be said that is the Kickstarter of the sharing information outside your bank. Okay. Even though open banking is regulatory, I think it opens a way or a green field, which we call the finance, open finance, which is beyond regulation. And actually, I think it's good for the three persons involved, which is the banks, the partners, and the final customers. Because as you said, the final customers now can use the information they have originally in the banks or in other companies in their own behalf, okay, to achieve maybe a loan, to achieve maybe better rating, or to achieve, for example, an insurance. I think there are benefits for each one of the actors here.
By the way, what are the differences between open banking and open finance?
Yeah, sure. Open banking is just the regulatory part, and it affects mainly by now the payments accounts or payment information. You can initiate a payment or you can request transactions from a payment account. And open finance is a little bit currently beyond that regulation. So imagine that I use the same method as open banking, but for giving you a loan. Okay, that's not under open banking. Open banking is restricted to the payments. It comes with the regulation. But when I say that it opened a new way of business, I'm referring to that. Open finance is, for example, insurances, loans, or confirming, factoring. So you can serve end customer, which is retail or which is company, okay, or they are companies, and that part falls into the embedded finance. So I told you before, for open banking, I received the call from a third party saying, I have the consent of this customer, give me the information. And that's it. That's your interaction like a bank. But for embedded finance, it's not like that. We, like a bank, talk to a partner and we co-create about, okay, what do you want? Because this is a financial service the partner is going to offer to their customers, to their employees in their own experience, in their app, the web, and so forth. So what do you want to solve? What problem do you want to solve? What exactly do you need for your customers? And how are you going to build it together? So there is a fulfilling co-creation, and actually you are helping that partner to serve better the customers. And the range of products is not limited to payment accounts.
What's the most, call it dangerous category to open up and why?
I would say that we have the bank, we have the partner that embeds the API, and we have the end customers. Then danger could come to the different levels of this change, of the value change. For the banks, the most dangerous part is the risk-bearing products, or are the risk-bearing products, sorry about my English. Why is it? Because the embedded finance adds a layer of difficulty on how to trust the end customer that is requesting for a loan, for example. It could be a difficult KYC. It could be that you don't have enough information. It depends on the countries. If they have a positive or negative bureau, you don't really have access to the data. Imagine that it's even more complex for the KYB. If it's a company that you have already some interaction with that company, maybe you have information enough to make a proper KYB. If not, you are on your own. It's really difficult. And that part is a risk for the banks. I will say the main risk for the partners, which embed the API, it could be that they are offering a new service, it's a financial service, in a non-financial experience. So they are expecting that their customers are served properly. And by served properly, imagine an example of a loan. If you are offering a loan to your customers and turns out that because of, I told you, the difficulties on the KYC, KYB, you are neglecting or you are denying 70% of the loans, that bad experience falls in the partner. So the customers get angry with the partner that is embedded in the API. Of course, this is an example of an immature product, right? And that's why we are working, all of us, scratching our heads about how to have the most mature products in the market and this kind of problems not happening. But this is a risk, for example, okay? And for the end customer, I think for the end customer, really, this is a financial service. They know financial services, they work similar as in the bank. But then there are more layers of intermediary players. You need to make sure that all the players are in the same value chain. Okay, they all are thinking in providing value to the end customer the same way. If not, it can occasion problems. Imagine there is a dispute, and then the end customer is found thinking, okay, I have a fintech, and the fintech is with an aggregator. The aggregator goes with a bank. Who can I complain to? How can I complain to? This is part of how we are evolving as well. I mean, this is a green field. We are learning. We are fixing. I think the fundamental thinking of the market is good, but it has to be grease. It has to be like more cohesive than it is now.
Interesting. I like how you draw the line between open banking and open finance. What's the biggest lie people believe about open banking or open finance right now?
About open banking, I will say that it's about the security of the data. So open banking, as I told you before, it requires the consent of the customer. What does it mean, the consent? You have to give, you have to select which bank you want to get information from, and you have to give a consent to that bank, saying, okay, I consent this third party to use my information. Okay. And that is a risk itself. And actually we come from a situation of screen scraping. Okay. Before open banking was born, and in between, because it didn't disappear with the PSD2, That exists the screen scrapping, and the screen scrapping was really risky operation where you give your login of the bank to a third party, and the third party use that login to scrap all the information to
Yeah,
call
yeah, yeah.
and scrap
I remember.
information. And PSD2 initially was born with the intention to eliminate the screen scrapping. In the end, PSD2 couldn't do it. Okay, I think PSD3 will be better on that, but that ambiguity in the system made that a lot of people think open banking is more about screen scrapping and that it's not safe, and that data could compromise your integrity or your accounts. And actually, it's not like that. Open banking is quite regulated, and banks need to store the consent, need to know the customer has a consent. If is there a problem, we will say, okay, we have the consent, and the consent was given this day. As we are really regulated, that problem doesn't happen. But is the biggest fear of the people that this is a screen scraping version 2 or 2.0.
To understand the success of embedded finance, we must first, in my opinion, understand who is building its foundations. And with so many technology providers entering the sector, what is the current landscape of these new players?
Well, we said before that embedded finance, open banking, fundamentally changed the mindset of the banks. And why? Because before it was the bank and the customer. And if the customer wants anything from the bank, goes to the bank, either physically or logically, right? But it turns out that like we are sharing our services, either through open banking or embedded finance, with third parties, we are enlarging the ecosystem. And then that ecosystem initially was three steps: the bank, the partner embedding the API, and the end customer. But it turns out that appear aggregators. So now we can think on 4 to 5 steps, and also we have the regulation that could be the framework, okay, that sets the field, and then you have the banks, and the banks are the license, trust, and financial service. Financial service will never stop existing; they are needed. What is changing is how the final customer uses them and from where. Okay, that's what is changing. So you have the banks with the financial services. Then you could have the aggregators or open banking initiators. There are companies that are appearing in each one of the countries that aggregate from one side all the banks, and for the other a lot of SMEs or companies. So it's much easier to propagate APIs through them. Okay, because obviously it's easier than going door to door to 100,000 of SMEs. Say, why don't you embed my APIs? Well, they may not have the need, they may not have the team, and there appear this kind of aggregators. Some of them are really famous. Okay, and those guys are really proficient gathering companies, and they are really professional linking banks. So in the end, they are part of the ecosystem as well. Okay, and they are an important part. And also we have the partners or the fintechs that could embed the API directly or through these aggregators, and we have the final customer. The final customer could be retail or could be a company. So this is not the most complex. There could be even more complexity. Okay, imagine that you have an ERP or a core banking that also embed APIs, and then you have even one more level inside. But you can see the ecosystem becomes complex, and that complexity has to be solved by the players, the end customer. The end customer has to be the final beneficiary of this complexity. Okay, so the new ecosystems you will find are a bank, a partner, and a customer. A bank, an aggregator, a partner, and a customer. A bank, a core banking, maybe aggregator. So it goes from 3 to, I won't say N, but from 3 to 4 or 5. But the end customer is the key person. If the end customer doesn't feel it has value and that the value is fair, this whole chain won't work.
Jose, given the speed at which open banking is evolving, where should a traditional bank begin?
I think this is a really good question, and actually it's like, how to say, like the elephant in the room, right?
Yeah. Maybe you can share your experience.
So if I had to give an advice to a bank that has to start, is you need to think first, what do you want to become in this value chain? So we say ecosystems are getting complex.
Right.
We say that no matter you go against, the market is changing and the final users are getting used to do financing without going directly to the bank. That's happening already. So you need to make sure, where do you want to play in these value chains? There are some banks, and it's quite legit choice, that say, no, I will just give license and I will just create products, but vanilla products. Okay. I won't really care about the end customer because I don't feel up to the challenge, or it costs too much. Fine. Those banks exist, and they are creators of backend and back office for other companies to have the customer base. And that's okay. Other banks think, okay, I need to play the open banking because it's regulatory, can escape from that. But then I want to play also the game of embedded finance. And when you do that, which is what BBVA said, you have to think up to which level I want to bet for embedded finance. So embedded finance is a fundamental change on the way of doing banking. You don't do banking anymore looking inside for your own channels, for your own people. It's about, you need to learn how to do banking outdoors, the open market and the open market outside of your channels. That means that you need big investment, not only technological investment, but also like process investment, also like product creation. The product has to be different. Servicing has to be different. Post-sale has to be different. The way of selling has to be different. It's not the same that you are selling a product where I say, I bring you to my channel and then you log into my channel and you work. This is not like that. This is, okay, I will set you maybe a solution, but that solution will be in your journey, in your app, in your web, and it will work if you promote it, because you are the one that has the customer base. That customer base will have to benefit from the API from my bank. And in the end, the relationship, okay, you access to that customer base as well, right? But that's something that has to be thought at the beginning. And actually, you have even to teach the partners how to act, because they are not financial experts. They are experts in other segments. Maybe they are retailers. And suddenly they have an offering, which is financial offering. So that means that you have to bet and you have to invest. And that investment, this is an in-between, right? Between being the best of embedded finance and being just initially in embedded finance, how much you can change your bank, how much you can invest, how much are you going to change. I think most of the banks in Europe, at least, we are in between, like more or less degree of investment. Some banks have invested a lot, and you see them that they are the ones that appear. We BBVA, we know we are doing well as well. We appear like we are one of the leaders of embedded finance and so forth. We know some banks are doing even much more. We know another banks are doing it and they don't claim it. Okay, they do it in secret. But I feel all the banks we are in between. And even I tell you, some of them decided that they are not going to play this game, and that's fair. That's good.
By the way, looking beyond borders of Spain, or we can take it even broader, borders of Europe, the impact of embedded finance and open banking is already redefining entire industries. What successful strategies or implementations in other countries have caught your attention, and what key lessons do you think we could import to our own markets?
I will say that regulation is always the Kickstarter. So regulators test the countries, and they realize there is a need maybe for immediate payments and better regulated, and they are looking to other places, like for example in South America or Latin America, that we have a lot of banks there in BBVA. We feel that they are looking at what Brazil is doing, what Europe is doing, what the PSD2 achieved, what US is doing. So they are trying to learn one from each other. But usually the Kickstarter is always regulation. And the Kickstarter serves just for that, for kickstarting. Okay? Just with the pure regulation, you won't make the best feel for embedded finance. So one example that we like a lot is from US. The US, they are market driven, and that's really good. But being market driven also requires a little bit of regulation, because if not, they could have a trust problem. If they feel everything is in the hands of the market, they say, but where are my security, my trust? How can I feel secure about this? So we feel those countries that are learning now from experience of others, like Brazil is trying to do it, like for example, I know Colombia is trying to do it as well. They start strong regulatory, but then they have room for the open market. Those are the best examples. We know some players are more advanced, or at least more futuristic advanced, like Australia, that Australia is not even talking about open finance, it's talking about open data, which is the next level, right? Because we talk about open banking, banks share data. Open finance, okay, through co-creation and data of the partner and the banks, we can do something, some product of value for the end customers. And open data will be every single segment, not only banks, will share data. And if all the segments are sharing data, the problems that could be solved for the customers are beyond financial problems, right? Go to vital problems. And that's really the far ahead objective of all of this. Why it started with open banking? Because banks are highly regulated, so it's easy to have a regulation. Why is not moving along to regulate other segments? Because who regulates all the segments, and how can they get in the same synchrony as the banks, right? So I think it's natural that it started from the banks. It has to move to the other layers. So we like, for example, the example of Australia, as I told you before. We like the market driven. We like the right mix of regulation and market driven markets.
Interesting. I feel like overall the direction is very positive. Different regions do it in their own way. What I'm interested about is a lookout in 5 years. Call it 5 years from now. In your opinion, will open finance be remembered as the thing that democratized financial services, or the thing that centralized data power?
I will say that it will be democratized the services. And why? Because first, data is alive. Okay, it's really difficult to centralize data. Easy example, right? Banks have data about you, but we don't have the whole data about you. We don't know, for example, how are you interacting with utilities that are not in our bank. We don't know that. But also, we don't know about how your social networks and how famous are you in social networks. And we are not used to get that data for taking decisions. Even we have our silo of data. First, we are obliged to share it, which is already democratizing. And second, the data is alive. There are happening so many innovation milestones right now that a lot of the data that could be important 20 years from now is not recorded anywhere. A lot of the data we were using for scoring 15 years ago are not valid anymore. And I would a really easy example as well. Gig economy, right? One gig economy, one person that, for example, is living doing TikTok videos. And that person tried to ask for a normal loan. The normal loan in a bank, normal loan doesn't even know how to recognize him or her, right? Because they say, okay, do you have a contract? What? How you earn money? So that part of the gig economy is not even recorded. It has to start now being recorded. And that data that banks have traditionally not care about, now they have to care. And that, in fact, is a democratization of the data as well. Because the most important data is the one that is outside, not only the one that you have inside. It's a rough example, okay? But I think
but it makes total sense. I love that. I like how our conversation evolved from talking about open banking. Then we added another layer of open finance, and now we are at open data. I think it just paints the whole structure beautifully, and I don't think we've explored at that level of granularity before. So really enjoying that. But the conversation about data also brings my last question, and it's about our own financial data. So if someone's listening to this and thinking about their own financial data, what's the one thing they should do differently tomorrow?
My advice for individuals or maybe SMEs or sole traders with their own financial data is that all open banking, open finance, even open data in the future is here to serve the customer. So the customer is the central piece. And why is that? Because if the customer doesn't feel happy with the products, they won't consume them, and then this will die. They will die. Sorry. And then why is that important? What's the message here? So your data, not only the banking data, your data is yours for your profit. Doesn't mean that you are going to get money from the bank for your data. Okay, it's not about, oh, my data, how much is worth my data. No, it's not like that. It's not like that. But then you need to make sure, and you need to be a little bit careful about, okay, what's the offering? If I share my data, what will I get for this data I'm sharing with you? After sharing the data, what will you do with that data? And do I think it's fair exchange? And that's what they have to start doing. For open banking, it's obvious because it's regulated. So I give you a consent, you get data from my bank. Thanks to the data from my bank, maybe you can have better advice in an advisory app, for example, about how to invest and so forth.
But again, it's only about payments.
Well, it's all about payments, but
payments data.
As is the easiest because it's the most straightforward exchange. It's easy for you to feel that you are getting the value, enough value for the data. And second, you have to make sure that that data is used for the original purpose, okay, and not used for later like calling you or okay, fine. It has to be fair and it has to be regulated. Okay. Now for open finance, it happens the same. We need to make sure that the data we are using gives the end customer a proper value, and that proper value is recognized by the customer. And here, it may not be the end customer sharing the data. It could be the partner sharing data. Imagine a partner from a utility say, okay, we'll give you some data on how the payments or how the bills are being paid for my customers or for my providers. So you can give them a confirming factor in whatever. Okay. So in the end, there is a sharing of data, even if this is a one-to-one agreement, but the final value ends into the providers. And the provider had to feel, okay, this relationship between, for example, BBVA and this utility company is worth for me because thanks to that, I have access to easier like working capital or easier billing finance, or I mean, in the end, all this exchange has to be worth for the end customer, and that's why I think the customer need to start thinking that this is an opportunity for them.
And I think we can finish right here this positive note, looking at this whole conversation as an opportunity for the end customer and for the whole industry. And so thank you very much for this conversation. I enjoyed it a lot. And I hope the listeners also enjoyed that.
So thank you very much, Alex. It was really nice talking to you.
And for the listeners, thanks for listening to the end. And don't forget to hit the like button in YouTube and subscribe to the channel, and also leave comments and feedback on the podcasting platforms that you may be listening this at. And see you in the next episodes. Bye-bye.